Yes. So the topic what we are going to see today is it is a chapter called Comparative Statements and Common Size Statements. Now, what we are going to compare? The word itself says it is something called comparative statements. So we are just going to compare some of our financial statements. So comparative statement when we say we are going to compare some of the financial statements. So here the statement we are referring to financial statements. Financial statements. When this is financial statement, we should have a clarity like what are all the statements that can be declared or that can be considered as a financial statements. So let me list out the list of financial statements what we have in our syllabus and what we normally consider it as a financial statements. Number one, the statement of profit and loss. So the statement of P&L is a financial statement. Number two, balance sheet. Number three, cash flow statements. Number four, ratio analysis. And finally, number five, we'll call it as notes to accounts. Notes to accounts. So there are five important financial statements which we have it. They are statement of P&L, balance sheet, cash flow statement, ratio analysis, and notes to account. In this five, the notes to account, this particular statement will be common in these two particular concepts, which means notes to account will be found when we prepare the statement of P&L as well as when we prepare the balance sheet. So notes to account will be there in balance sheet and as well as in the P&L. Now, what is this notes to account is? It is nothing but it is giving you an additional information or a detailed information about the contents appearing in the respective statement of financials. Okay, so notes to account provides you an additional information with respect to the contents appearing in that respective financial statement. That is the significance of notes to accounts. Okay, provides detailed information with respect to the items appearing P&L and balance sheet. So notes to account will provide some detailed information with respect to items appearing in P&L and balance sheet. That is the reason you will be finding it as a common item when you prepare statement of P&L and balance sheet. Any doubt up to this? Hello?
No, sir.
Yeah.
No, sir.
Now, why do we prepare P&L is quite simple. P&L, when you prepare it, it gives you the financial performance of the business. Okay. P&L account, when you prepare, it gives a financial performance of business. What is the financial performance when you ask, or when you say what is this performance, that refers to the performance is nothing but either the profit or the loss for the year. So this is the performance of the business. Either you will end up in a profit or the loss. So that will be measured, okay, as a business performance by preparing the statement called as P&L. The second one, balance sheet. This we will be calling it otherwise as this will provide us the financial position of the business. This gives you the financial position of business. Okay, that means with respect to how much assets you have and how much liabilities that we have in the business. So, what is the total liability and the total assets? Okay, and the capital introduction and creditors, all those informations will be provided by the financial position. Okay, that is balance sheet. So balance sheet will give us the financial position of the business, whereas the performance of the business will be come to know by preparation of your statement of P&L. Now, this profit and loss account is also known as, okay, profit and loss account is also known as income statement. The other name of P&L is income statement. Okay, this is the other name of P&L. Whereas balance sheet is only declared as a balance sheet. We don't have any other name for balance sheet. Only for P&L you have the other name. It is income statement. Okay, am I making sense to you?
Yes, sir.
Okay. The next one, cash flow statement. What is this cash flow statement? If you ask, usually to run a business, we need something called as capital, which is most essential, irrespective of any type of business, whether you do it on sole proprietorship or on partnership or on a joint stock company basis, or whether you do it on a small scale business or as a medium scale or as a large scale business. So capital is considered to be as a finance, that is a finance is considered to be as a lifeblood of any business, without which you can't survive or you can run the show. Now, this capital which you are going to introduce the business can be obtained in various forms, such as loan from the banks, your own savings, what you have so far, and then by issuing the shares of your company to the local public, or by raising through debentures. So there are various sources of finance. Now, you use any one among these sources, or you use all the sources to mobilize or to pull up the required capital. Once the capital is being got ready, you will have to set your business. So for setting up the business, you have to get certain things, like for example, you need machinery to run the show, because today it has become all robotics and mechanized way of business. So machines are essential. You have to invest in the assets like fixed assets, machineries, land and building. Okay, plant and machineries, all those things are required. Second, you have to run the business with the aim of earning profits by providing either some services or by involving yourself in some trade activities. So that means some particular item is going to be a core segment of your business performance. You are going to perform some activity, whether it's going to be a trade activity or it could be a service providing activity. That is your core business operation. So that means you are going to undergo something called as business operations. So you need purchasing of raw materials, all those things. So usually when we come to a business, there are three important activities which we have to understand. What they are, if you ask, that we are going to learn the chapter called cash flow statement. In this chapter, cash flow statement, we will be learning some three important activities, namely operating activity. You have something called as operating activity. The second activity is investing activity. The second activity is investing activity. And finally, the third activity is financing activity. The third one is financing activity. Now, let me make you to understand what we are going to learn under each of these activity. First, operating activity. The next one is investing activity. The last one is financing activity. But see, though we have marked operating activity as the topmost, okay, as the first activity in the order, but financial activity stands as a base. So I just want to make you to understand that finance is the lifeblood of any business and it is essential. So that's why we are declaring the financing activity as a last activity, but it is and the base. It is the base, and you will be collecting the finance, the required amount of capital. Okay, you will be collecting it from various sources like loan, okay, loan borrowings. Then you will be, okay, collecting it in the form of shares or debentures. So all these are representing the inflow of money. The business is getting the required amount of capital, the cash, in these segments, so they are inflow of money. So inflow of cash. On the other hand, okay, what you need to do if you are getting a loan, when you borrow loan, you have to pay interest. When you are issuing shares to the public, you have to pay dividend as a return. When you are going to raise the funds in the form of debentures, you have to pay again interest. Then you may say, sir, அப்போ ரெண்டு தடவை இன்ட்ரெஸ்ட் பே பண்றமா? Okay, this is with respect to bank loans or any other loans, financial institution loans. This is interest on loan. Okay, this is interest on loan borrowed. This is interest on dividend. So when you make a payment of money towards interest and dividend, this will be declared as outflow of cash. So basically, in cash flow statement, we are going to
Sir, that is interest on debenture, right?
sorry, sorry, sorry. I'm sorry. Thank you. Thanks, Kana. Okay. So interest
Yes,
on
sir.
loan, this is one, and here interest on debentures. So all these are denoting the outflow of cash. So basically, in cash flow statement, we will be learning these two things, that is inflow of cash and outflow of cash under various activities. Okay, let me make you to understand how it is going to be possible in investing activity. Now, once you have mobilized the finance what you have got will be applied on some of the fixed assets which is essential to carry out your business. So that means the base, okay, capital or the finance is going to be applied on the fixed assets. Okay, so here in investing activity, if you see, okay, it is nothing but application of funds. In simple terms, we say it is application of funds on various fixed assets. So basically, investing activity will be, okay, focusing only on the fixed assets and none other than this. So application of funds on various fixed assets. So when you say fixed assets, there is two possibilities. One, you will purchase, okay, you will purchase fixed assets. When I say the purchasing of fixed assets, this includes both tangible as well as the intangible. When I say tangible, example for tangible are like plant and machinery, furniture and fittings, all those things. Okay, furniture, vehicle, building, all those. When we say intangible, the example for this will be goodwill, patents, copyrights. Have you come across all these words?
Yes, sir.
So, goodwill, patents, copyrights, okay, all these are intangible fixed assets which can also be purchased. Okay, that's what when you learn the goodwill chapter. Okay, when we have this learned the goodwill chapter under the, okay, partnership concept, you will come across purchased goodwill and self-generated goodwill. So purchased goodwill is goodwill can be purchased provided when you are going to take over someone's business. When you get someone's business into your control, obviously you may have to pay for the goodwill of the company also. So that means it becomes a purchased goodwill. So we have got two different types. One is tangible and intangible assets. Both these assets can be purchased. So purchase of fixed assets, which will be dealt under the investing activity. So when you buy an asset, what happens? The cash will go out. So that means this will lead to outflow of cash. Am I making sense to you? When
Yes,
you,
sir.
okay, then how about the inflow of cash? We would have learned in a chapter depreciation in 11th standard that you will buy a fixed asset, you will be utilizing the fixed assets, and once the efficiency and efficacy of the fixed assets is getting deteriorated, you will sell out that particular fixed asset and you may go with a new one. Right? This is a cycle of a asset what we have got in the business, right?
Yes, sir.
So when you sell a fixed asset, what you get, you're getting a revenue out of it. No matter whether it leads to profit or loss. Here we are not going to see that. Here we are going to just look into the concept of inflow of cash. Okay, and the stock and the asset and a vitachi. Okay, I had one fixed asset. That asset I have sold out, and then I got some money out of the sale. So that will give you inflow of cash. Okay, so here the sale of fixed assets. Okay, sale of fixed assets either for profit or at loss. Both, okay, anyone can be the concept. These two will be indicating you the inflow of cash. Any doubt in this concept?
No, sir.
Right. Now let's go for the first one, the topmost one, that is the operating activities. So here the operating activity is nothing but it deals with the core business operations. Okay, so it deals with the core business operations. Okay, so that means each company would have been involved in some activity, whether it could be a okay activity of one, okay, that is called as what trading, or it could be on activity of service providing. Correct? Am I right?
Yes, sir.
Okay, if that is a case, then we should take what is their activity on the wholes. Okay, so we have to understand what is their activity. They could be providing us a service, or they could provide us some of the what trading activity. They have been involved in trading activity. Correct? Just 1 minute, Pranav. So, what is the ultimate objective of any business? What is the ultimate objective of any business, ma?
To earn profits.
To earn profit. But will all time the business will be earning only profits?
No.
Okay. So at times they will also have to face the losses, right?
Yes, sir.
Okay. So when a company faces the loss, what happens? Their capital is getting decreased, right? Whatever the capital they have introduced, that particular capital is getting decreased. Correct?
Yes, sir. Yes,
Okay.
sir.
So in this way, you can see there is an inflow and there is an outflow of cash. Okay. So when you are starting up a business and when you are going to undergo some business operation, okay, it is not only the loss that will reduce your capital, even the other items such as the rent what you pay to run your business, okay, will reduce the profits. I mean, will reduce your capital. At the same time, the depreciation what you charge on these fixed assets will also reduce our capital. So that means there is a possibility of inflow of cash and outflow of cash even in the operating activity. Okay, so here when we talk about the core business operations, we can again divide this into two segments. One, okay, the profit what you have earned, okay, profit for the year, okay, the amount of profit for the year will be declared as an inflow of cash. So profit for the year, okay, and then you will be facing some of the okay concepts like depreciation, okay, which you have to pay, or rent what you have to pay, or operating expenses, okay, or the amount that you have to allocate from the earn the profit in the way of reserves. So profit for the year is inflow, and other here you see, okay, depreciation or allocation of reserves, allocation of reserves from profits in the form of general reserve or any other specific reserves. So when it's the allocation of reserves from profits, it could be either a general reserve, or it could be a specific reserve, because we learned that reserves are nothing but an amount which has been kept aside out of the earned profits. Do you remember?
Yes, sir.
So when you are going to segregate some portion of your earned profits towards reserve, what happens? Cash is going out of the profits. So that leads to an outflow of cash, right? And at the same time, when you are going to pay the interest, okay, that also becomes a outflow of cash. So there are certain things, transferring the amount to a general reserve, and then payment of interim dividend, okay, and then proposed dividend, and then provision for the taxes. Okay, as a business, when you earn profit, you have to pay tax. So here when you come across this, there is something called as provision, okay, for tax. So certain things which we'll be learning in detail when we go for a chapter called cash flow statement. But now you can just understand. So from the business operations, you will be getting a profit or loss. If you have got profit, just a minute. If you have got profit, the profit is an inflow of cash, and if you have got a loss, that's an outflow of cash. And in addition to that, these are the items from where you can find the outflow of cash is depreciation, allocation of the reserve from the profits either towards a specific reserve or for a general reserve, and providing for the taxes. All this will constitute the outflow of cash. So here, this is inflow of cash, and these items denoting the outflow of cash. So let me know whether any doubt that you have as of now with respect to these concepts, because all these concepts is coming under the topic of cash flow statement. So under this chapter, you'll be learning it in detail. Okay, but since this chapter has this term financial statement, we have a term called cash flow statement. So I gave you an introduction to that particular concept as well. So here, this cash flow statement usually deals with inflow and outflow of cash under three different activities. Under the three different activities. Is it clear to you?
Yes, sir.
Okay. So the next one in our list of financial statements is, okay, we have something called as ratio analysis. So basically, ratio is nothing but it gives a relationship between the two items or the two variables. Okay, so it provides a relationship between two items or variables. So in accounting, we will be using the ratios to derive the relationship between a current assets with a current liability, a fixed asset, okay, and then with any of the liabilities. So in this way, we'll try to bring out how the assets and liabilities are being connected. Okay, so what is the relationship between the assets and the liabilities by using the ratio analysis? So where we have certain benchmarking to derive the, what's it, ideal ratio. There is something called as an ideal ratio. So whether the management, the business is maintaining the ideal ratio or not, all those analysis will be learning it from the chapter of ratio analysis. And here also in ratio analysis, to put in simple terms, okay, ratios are basically of four types. Okay, ratio, okay, analysis, the chapter is, so ratios are basically of four types. And I'm just going to give you a mnemonics for easy understanding. But here it will not be in order, but just to understand what are the four types. Okay, the easy way of understanding this will be slap. Okay, for ratios, just have it as slap. So S stands for solvency. Okay, so solvency ratios. L stands for liquidity ratios. L for liquidity ratios, A for activity ratios, okay, A for activity ratios, and the last P stands for profitability ratios. Profitability ratios. So we are going to learn different types of ratios under this major heads. Okay, there is slab. So under solvency, we'll be learning what are all the ratios that comes under solvency ratio. Under liquidity, what sort of ratios will be dealt with. Under equity, what will be included. Under profitability, what will be the ratios that we are going to see. So in simple terms, ratios are of four types, and ratio brings a relationship between two items and the two variables. And the easy way of understanding the different ratios or types of ratios is slab, solvency, liquidity, activity, and finally profitability ratios. Any doubt as of now with respect to ratios, what you are going
No,
to
sir.
learn? Okay, so just to sum up for the sake of Rohit's Rohit, actually we have started with a new topic called as a comparative statement and a common size statement. Okay, and
Yes, sir.
basically this statement we'll be learning two important financial statements. So before we go for what is a financial statement that we are going to deal in this chapter, we must be aware like how many financial statements are there in general. So totally we have got five different financial statements. They are statement of profit and loss, balance sheet, cash flow statement, ratio analysis, and notes to account. This notes to account will be a common for P&L as well as for balance sheet. You may find when you prepare a balance sheet as well as when you prepare the okay P&L, you may find there is one column called notes to account. So what is this notes to account? This it gives us a detailed information with respect to the items that are appearing in profit and loss as well as in balance sheet. So when I say about the profit and loss, it has also got another name, that is nothing but the income statement. And then this profit and loss will provide us the financial performance of the business with respect to the profit earned or the loss suffered for that particular year. And the second one is balance sheet, that will give us the financial position of the business with respect to the assets and the liabilities. That means how much fixed assets we have got, how much current assets we have got, and how much liabilities that we have got. In that, how much is a current liability, how much is a non-current liabilities, long-term liabilities. All those split ups will be able to see from the financial position, that is balance sheet of the company. And then the third one is called as a cash flow statement. So cash flow statement is nothing but it is a statement which usually gives us a meaning about the inflow and outflow of cash under the three important activities. So usually the activities are being classified into operating activity, investing activity, and financing activity. Basically, the financing activity is the base foundation for the other two activities. So here if you see the finance what you have got, it can be from the loan, you can borrow from the loan, or you can obtain it from issuing a share to a public, or even from debentures. So when you are going to get the finance in this form, the business gets funds, and that means there is an inflow of cash. So this is one way. On the other, you may have to pay interest for the loan amount what you have borrowed from the banks or any financial institution. So payment of interest for the loan, or payment of dividend for issued shares, and then payment of interest for the debentures what you have issued. So all these payment will be denoting the outflow of cash. So thereby in financial activity you have found out there are two segments: inflow of cash and outflow of cash. Then moving on to the our second activity, there is investing activity, where you are going to apply these funds, okay, on various fixed assets. So obviously, this particular, okay, investing activity deals only with the fixed assets and with nothing else. So when I talk about fixed assets, there is two possibility. There is a purchase of fixed assets and there could be a sale of fixed assets. So when you're going to purchase a fixed assets, okay, it could be a tangible fixed asset or an intangible fixed assets. So example for tangible are furniture, vehicle, building, etc. When you talk about the intangible fixed assets, the first and the foremost comes to us mind is goodwill, patents, copyrights, etc. So when you buy these fixed assets, obviously you spend money on those fixed assets, so that it leads to outflow of cash. On the other hand, after using it for a time period, either tangible, okay, the furniture, vehicles, etc., you will be selling it out and you may go for a new one. So when you sell the fixed assets, whatever you purchased earlier, it could give you either a profit or it could lead you to a loss. No matter whether you get profit on sale or loss on sale, this profit or loss on sale of a fixed assets will be considered to be as a inflow of cash. So thereby, when you talk about the investing activity, there also you have got the two segments: inflow of cash and outflow of cash. And coming up the operating activity, this deals with the core business operations. And here we have got two types. One is inflow of cash, the other is outflow of cash. Usually, business gets inflow of cash in the form of profit earned for the year, because you're doing some business activity and that leads to a profits. And the items that will pull out your profits are depreciation, allocating the profit towards the reserves in the form of a general reserve or a specific reserve, and providing for the taxes, payment of taxes for that particular year. Okay, all these will let you to outflow of cash. So thereby, inflow of cash and outflow of cash are there in each and every activities of the cash flow, and learning about these inflow and outflow is the significance of cash flow statement. And I think when I was dealing with this ratio analysis, okay, what is the ratio? You are there in the session, or do you want me to repeat the ratio
Yes, sir.
analysis?
Ratio understood, sir.
Right. So this is to put in nutshell the entire concept of the financial statements. So now we are going to take two items out of these five items for comparative study. When I'm going to say comparative statement, we are going to do the comparative statement on these financial statements, but not on all the five financial statements. The two financial statements which are eligible for the comparative is, we have got two items, okay, two statements. They are the statement of P and L, okay. So statement of profit and loss, and on the other hand, okay, the balance sheet, okay. So these are the only two financial statements which can be compared. Okay, you can do a comparative statement, okay, for P&L as well as for your balance sheet. When I say comparative statements, Okay, it is eligible or it is applicable only on the financial statements that I made it clear, and it is also possible only on these two financial statements, P&L as well as for the balance sheet. But we have some types of comparison. Okay, what is it? If you ask, we have two different types of comparisons. Okay, it's not state. Comparisons are also of two types. Okay, so comparison we have got two types. One is we call them as inter. Okay, we call them as inter firm comparison. Okay, and the another one is intra firm comparison. Do you have any idea between these two words, inter and intra?
Between all the firms and between the same firm.
Very good. So inter is nothing but comparing. Okay, comparing the performance, compare the performance or position of our business with other business. Okay, with others business. That could be our competitors. This is inter, okay, firm comparison. Okay, this is your inter firm comparison. When I say about intra firm comparison, this is nothing but comparing the performance or the position of our own business over a period of time. So self-analysis, or we can say other word as intra-firm comparison is nothing but doing a self-analysis, okay, with respect to the performance and position of our own business. Can you able to get the concept between this?
Yes, sir. Yes, sir.
So for these two comparisons, inter-firm comparison or intra-firm comparison, we may make use of either profit and loss or we'll be using the statement of the balance sheet. Right? Now you got a picture about what is comparative statement is all about.
Yes, sir.
In the Yes, same sir. In the same way, we will also be doing it something called as common size statement. Now, first, what we'll do is let us go and start performing this comparative statement. Okay, we'll try to work out at least one or two problems. Okay, initially from P&L as well as from balance sheet, and then we'll move on to the other one that is called as common size statement. One and then we'll have a clarity. Okay, so first we have learned today something called comparative statements. Let us take a problem from the textbook exercise. We'll try to work it out, and then let us try to understand how to do this comparative statement. Clear?
Okay, sir.
Okay. So here I've got a balance sheet. Okay, comparative statement, balance sheet. So first type of problem is where we have to alert or we have to arrange the given items as per the order what we have in the company's balance sheet. Normally, okay, when I say balance sheet, okay, this I forgot to tell you. Okay, normally when we talk about the balance sheet, okay, you have come across only one type of balance sheet. Okay, when you say balance sheet, okay, this refers to the company's balance sheet. Okay, it is referring to company's balance sheet. When I say company's balance sheet, then it should be prepared, okay, on the basis of the Companies Act 2013. Okay, so balance sheet, when you talk here, it is company's balance sheet, which is prepared on the basis of, okay, prepared on the basis of Companies Act 2013, Schedule 3, Part 1. Okay, so we have to follow this procedure. So according to this, okay, the balance sheet what is prepared as per the company sector 2013 is nothing but we call this balance sheet as vertical balance sheet. Okay, vertical balance sheet, which means it will go at one stretch. Earlier you learned in your grade 11 and as of now in your grade 12, balance sheet means it's nothing but left hand side will be liability side. Okay, left hand side is a liability side and the right side will be your asset side. On top you will have been made very clear. Okay, balance sheet of the name of the company like that. But here, okay, it is not going to be of that case. Okay, this is something called as old one. Okay, which will be used only for sole proprietor. Okay, which will be used for the sole trader and for partnership business. And such type of balance sheet we call them as horizontal balance sheet. We call this as a horizontal balance sheet. Whereas the one which we are going to see now is something called as a vertical balance sheet. Am I making sense for you? Can you able to understand?
Yes, sir.
Okay. So first we'll see a problem where they have prepared the balance sheet and what we need to do for that particular one. Then we'll try to understand how to frame the balance sheet. Okay, and then how to proceed further so that it won't disturb you. Yeah, understanding. So first what I'm going to do is I'm going to take up the second problem. Okay, I'm just going to take up the second problem. Just read what they've asked you to do in the problem. Can anyone read the question? Second one.
From the following balance sheet, prepare comparative balance sheet of Mercury Limited.
Okay. So what they given you? They given you a balance sheet of a company called as a Mercury Limited. Okay. And then what are the informations that you have as a heading? Just as a heading, nothing else.
Particulars, note
Okay.
number,
Okay.
and dates.
Okay. So particulars you have got and then note number you have got. Okay. And then you have got the two different years. Am I right?
Yes, sir.
Okay, so now how to go ahead with formats and how we need to do the comparison. It's quite simple. You have to just answer. So before you go for comparative statement, one more thing you should understand is from the given data, you should be in a position to classify what is your current year, which we call it as CY, and what is your previous year, which will be denoted as PY. Okay, from the given question, it is not as per the what is the current financial year. Don't go with that understanding. Okay, so here you see they are given you two different years, right? They are given you in the details as of 31st of March. Okay, 31st of March. One year is 2021 and another year is 2022. So in the given series, okay, you have got 2021. Okay, and you got 2022. 2022. Now tell me in this which one is your current year, which one is your previous year?
2022
2022 is your
current year,
very good. 2021 is your
previous year.
previous year. So by looking at the question first, you should come to an understanding which is your current year and previous year. Okay, good. So now what I'm going to do is I'm just going to prepare the format for this comparative statement. So what is the name of the company they have said? The name of the company is Mercury Limited. So what you should do is you have to write it as a center Mercury Limited. And then what you are going to perform? You are going to perform a comparative statement. So write that comparative, and that too you are going to do for balance sheet. So you have to write in such a way comparative balance sheet as at 31st March. The two different years are 2021 and 2022. 31st March 2021 and 2022. These words are very, very, very important. The headings you should write as at, not as on. Okay, when you're going to prepare the balance sheet and that was a comparative balance sheet, please be very careful with the words what you fit for the headings. That is very important, right? So now, after recording this, what you have to do is you have to prepare the table. It is a table based. So first you have to write one column called as particulars, and the next column you will be recording it as note number. The next third column you are going to record it as the current, sorry, the previous year first. Okay, 31st March 2021. Okay, amount in terms of rupees. Okay, and then the next column you are going to record as 31st March 2022, amount in terms of rupees. So that means these four columns are already given in the question, but when you look at the question format, the column what you have first is, what column is this? This is your current year and this is the previous year. If the question is in this alignment, then you have to bring this previous year over here and you have to shift this current year to this side. That's what I done now. Can you able to understand?
Yes, sir.
Okay, so you
We should.
first and foremost you have to read the question and come to a conclusion whether do we need to alter the columns or need not required. Okay, so here there is a necessity to alter the columns because it is given in the other way. First column is your previous year, sorry, current year, and the second column is your previous year. So that way I'm interchanging the columns. And once this is done from the question, I have to introduce two more columns, namely absolute change. So the changes can be either increase in the value or decrease in the value. So I should open a bracket and write increase or decrease. Okay, increase or decrease. And this should also be represented in the rupees form. So rupees. And then finally the last column is I'm going to find out the percentage change for this absolute change. So it will be mentioned as percentage change, and this percentage change will also be an increase or decrease. So increase or decrease, you have to mention this. If you fail to mention these words, obviously marks will get curtailed. And here you are going to find out the percentage change. So this column should be with percentage symbol. Is it clear to you?
Yes, sir.
Okay, excuse me. And after recording this, we have to give some alphabets. We have to number them. That means this 2021 column will be marked as A column, and 22 column will be marked as a B column, and this absolute change column will be marked as C column. Okay, where you will be applying some formula. I'll tell what it is. And then finally, this column will be your D column. Now, the absolute change you are going to get by using the B column and A column. So the formula for the values of C column is C is equal to B minus A. Okay, this is the formula you are going to use it here. And then the formula what you're going to apply for percentage changes, D column is equal to the value in the C column should be divided by the value of A column, and that should be multiplied by 100 since you are expressing it in the percentage. Okay, so this is how you'll first set the okay problem. First, you have to write the heading of the company. Then, what you are going to perform comparative statement for what balance sheet or P&L. That you should mention it comparative balance sheet as at the given years, and then you will have to frame it. In some question, this note number will not be there in the question itself. Even if it is not there, it is customary that we need to bring note number into the picture in our solution. Up to this, any doubt?
No, sir.
No, sir. Right. Now let's come back to this particular statement. How it is given the particulars column, like that you have to write the particulars column. So number one, equity and liability. Okay. So okay, over here it's going to be as number one, equity and liability. Under this, they have mentioned numerical number one, shareholders funds. And under the shareholder funds, they are mentioned as share capital. So now for share capital, they are given two different values: 3 lakhs in the year 21 and 3 lakh 50 in the year 22. Okay, so in the year 21, it is 3 lakhs. We have to be very careful. Okay, in the year 21, for share capital, it was 3 lakhs, and in the year 22, it is an amount of rupees 3 lakh 50. You have to make this as a table, Kana. Yeah, that means you have to draw lines for each and every column. Okay, I am not drawing the lines, but you have to draw up the line. Clear? Now comes to the C column. So C column, the value you are going to derive it by 3 lakh 50,000 minus 3 lakh. What will be the value?
50,000.
Very good. But have the habit of saying rupees either in the prefix or in the suffix. Rupees 50,000. Now you are going to find out how much is the percentage change. So for this you can do the workings either at the bottom of your paper or side. So that means D column. So C column value, that is 50,000. Here I'm doing the working notes. Okay. So 50,000 divided by what is the A column value for the 3 lakhs. Okay. Divided by 3 lakhs into 100. So cancel out the common zeros. 4 zeros from here, 4 zeros from here, 1 zero from here, 1 zero from here. Now how much you'll get? 5 to 10, 50 divided by 3. So you have to go up to 2 decimal points. Okay. Whenever you're doing calculations and these problems and all, something will come exactly a whole value, or sometimes you may not get a whole value, but no problem, divide it. So 1 time 3, 2 times 2 is a balance, so 20. So 3 6 are 18, balance 2. So nothing is there. Put a 0 here. So that means point 0.6. So again 18. So that means it keeps going at 16.666. You have to stop up to the 3 decimal point. Remember very carefully. When you're doing this division, you have to stop your answer in the third decimal point. Now, after stopping it in the third decimal point, check out whether the third value, okay, the third value is 5 or greater than 5. If it is either 5 or greater than 5, you can round up the value. Okay, here I got 16.666. Since this particular value, okay, is more than 5, okay, this is greater than 5, I can round up this 0.66 as 16.67. Can you able to follow?
Yes, sir.
So when you are doing the division, please stop your answer in the third decimal point and check out whether the third decimal point is 5 or more than 5. In that case, you have to round up. Only then your answer will be exactly perfect with your master's answer. That means in board exam, the evaluator's answer key will exactly match with your answer. Or else there will be a point variation, they may reduce the marks. So please be very careful. So now coming over to here, I have to mention it as 16.67. Now come to the second item. What is mentioned? Numerical number 2, non-current liabilities. So number 2, non-current liabilities. Under this, what they have mentioned? Long-term borrowings. So under this, you have got long-term borrowings. Okay, what is the value? So for the year 2021, it is 2 lakhs, and for the year 2022, this 1 lakh. So 2 lakhs, and here it is 1 lakh. So now here you have to apply the formula. C column value is equal to B column value minus A column value. That means 1 lakh minus 2 lakh. What is the difference?
Absolute change will be 1 lakh only, so rupees 1 lakh.
Rupees 1 lakh, but it should be negative sign because 1 lakh minus 2 lakhs. So that means it gives you a negative value. Whenever you are going to write any negative value, don't write just a minus. You express in a bracket because these are the reports. When you present the report, it should be in such a way like it should be within a bracket. So 1 lakh. Is it clear to you?
Yes, sir.
Okay. Now, in the same way, you have to find out the percentage change. So that means 1 lakh. When you are going to do the calculation, here you can take a positive itself. Okay, don't get confused. Whatever the final answer you're going to get, that you can express in negative. Okay. So here 1 lakh divided by what is the value? 2 lakhs. Okay. 1 lakh by 2 lakhs into 100. So common zeros you cancel it out, and here 100 will come as 50. So as I said, sometimes you will get exactly a whole value, okay, or sometimes it will go in percentage. Since you got the whole value, you are just going to express here, okay, in the percentage column by opening a bracket 50.00 and close bracket. So whether you got a whole value or you got in decimals, show it for two decimal point. Okay, so if it's exactly 50, 50.00. Okay, and since you got the C value in negative, even the percentage should be in negatives. This is one of the most important area which we have to keep in mind because most of the students goes wrong in this one. They know how to perform it, but they miss to write this bracket. For not representing the bracket, obviously marks will get curtailed. That is the major, okay, error that leads to a major error. Failing to put the bracket is a major error, it's not a minor error. Okay, because positive value means different, negative value means it gives a different impact. Okay, so please keep in your mind wherever you get a negative impact, you have to show both absolute change and percentage change in brackets only. Am I making sense to you?
Yes, sir.
Okay. Come to third one, current liabilities. Okay, under the trade payables. So the third one, current liabilities, trade payables. Let's see the values. It is 1 lakh in the year 21 and 1 lakh 50 in the year 22. So 1 lakh, and here it is 1 lakh 50. Now you find out what is the difference. 1 lakh 50 minus 1 lakh will give you.
rupees 50,000.
Very good. Now come to this workings. So it should be 50,000 divided by 1 lakh into 100. Okay. So 50,000 divided by 1 lakh into 100. So 1, 2, 3, 4, 1, 2, 3, 4 zeros. 1 0 and 1 0. 5 tens are 50. So positive value, I'm going to record it over here, 50.00. Now come back to your balance sheet. You got total. Okay, write total below this. So the value of the total is, it is 6 lakhs and 6 lakhs. Okay, it is 6 lakhs and 6 lakhs. Now, when you are going to apply here the C column formula, C is equal to B minus A, 6 lakhs minus 6 lakhs will be 0. But when you are going to express in the report, don't record as 0. Instead, you just give a hyphen. Okay, instead, you just make it a hyphen. Okay, and obviously, if this is a hyphen, even this column will be an hyphen. Any doubt up to this?
No, sir.
Now, same way, carry out to our asset also. So, Roman number 2, you are going to record as asset. And under assets, you got first one is non-current assets. Okay, number one, non-current assets. Okay, and under that you have to record as property, plant, and equipment and intangible assets. Okay, property, plant, and equipment and intangible asset. And then what they are given in the question. Again, again, property, plant, and equipment. Write that. So 3 lakh and 4 lakh. Okay. Below this, again, you have to write property, plant, and equipment. So what is the value they are given for the current year? Current year is 4 lakhs. Previous year is 3 lakhs. Okay. So here 3 lakhs, 4 lakhs. The difference will be as 1 lakh rupees. Now 1 lakh should be divided by 3 lakh into 100. Okay. 1 lakh divided by 3 lakhs into 100. So common zeros, if it gets cancelled, you will be having 100 divided by 3. So 3 3 is a 9 1 0, 3 3 is a 9 1 0. That means it keeps on going like 33.333. Since the third value is neither 5 nor greater than 5, I need not round up the value. I can just record as 33.33. Is it clear to you, Kana?
Yes, sir.
So 33.33. Coming up to the next item, what is given to us? Current assets under the trade receivables. Okay. So number two, current assets under this, it is trade receivables. The value what we have got is 3 lakhs for the previous year and 2 lakhs for the current year. So 3 and 2. Okay. 3 lakhs and 2 lakhs. Now what will be the value? Negative 1 lakh. Correct?
Yes, sir.
Rupees. And again, if you see, previously we did 1 lakh by 3 lakh into 100, we got 33.33. Here also it's 1 lakh by 3 lakh into 100. You'll be getting a 33.33 but in the negative frame. Clear?
Yes, sir.
And now finally, you are going to bring out the total column. So both the sides 6 lakhs, 6 lakhs. So record it as total. It is 6 lakhs, and over here also it is 6 lakhs, and nothing will come over here. Okay, it will be as iPhone. So this is how you will be performing your comparative, okay, statement of balance sheet. So line
Sir,
by
always it will be equal, sir. Be balanced.
balance
Total,
sheet,
sorry.
no, balance sheet total will be equal, okay, for a particular year, but it can't be said like for both the years it should be the same total. That will vary from problem to problem. In this problem, they are given both the years it shows the same value. Okay,
If it is
there.
not equal, then what we have to do, sir?
In the same way, like how you did for the previous line. For example, if it's like this, here the 6 lakhs, I'm giving an example. Okay, suppose if this is a value of 8 lakhs, okay, say for example, this particular one, okay, where you have got 6 lakhs, this if it's showing an 8 lakhs, I'm giving an example. Of course, it's not 8 lakhs, just for your understanding.
Yes, sir.
So now 8 lakh minus 6 lakhs will be 2
2
lakhs.
lakhs.
So here you are going to perform in such a way 2 lakhs divided by 6 lakhs into 100. Okay, 2 lakh by 6 lakhs into 100. So common zeros getting cancelled. This becomes 300 by 3, 33.33.
Okay, sir.
Able to understand?
Yes, sir.
So that's what. Line by line, you are going to do it even for total also. Okay, nothing special. Okay.
Okay, sir.
So,
This is how companies express their balance sheets in uh, share market and all, no, sir.
yes, of course. Okay, so when you're learning the chapter of share capital, accounting for share capital, you'll come across okay the presentation of the company share. I mean balance sheet. So now we are just taken a problem under the comparative statement today, and we are discussed what is the comparative statement is all about, and where first we are taken a ready-made value. There's a ready-made balance sheet where they are prepared it ready, and we are just executed the comparative statement. So in the next session, what we'll do is we'll just take up a problem whereby we have to prepare the balance sheet. So here if you see from the following information, they have asked us to prepare comparative balance sheet. So you can see a difference for this balance sheet and this one. This is not a balance sheet. This is only the content in the balance sheet. We have to frame the balance sheet by having the major head and subheads and other allocations, and then we will proceed with the calculations. When it comes to calculation, no change. Line by line, you'll do the comparison. Okay, either if it is a positive value, you express the positive value. If it comes as a negative value, do not forget to put a bracket in both the columns, absolute column as well as in the percentage column. And suppose if the particular line shows that the previous year total and the current year total are both one and the same, then don't give it a zero. Instead, just put an hyphen. So these are the things which you have to keep in our mind. And of course, when you do the division calculations, kindly go up to the three decimal points. and check out the third decimal point, whether the third decimal point is third decimal value, not point. The third decimal value is either 5 or greater than 5 means you can round up the values. If suppose it is not 5 or greater than 5, it is less than 5, then you just express it as how you got it. Is it clear to you?
Yes, sir.
So in the next session, we'll work out the comparative balance sheet for the first one, like how to frame it, and then we'll move on to comparative P&L. Okay. So other problems and all, if you see, it is quite simple. That they'll be giving you the balance sheet completely. You have to just do the line by line analysis, like how we did right now. Okay. But one thing to ensure is before you start up the format, make sure in the given question what is the current year and what is the previous year and how the okay projection is. Look here. Here if you see the first 31st of March, here also 31st March, 22 and then 21. So that means they are given current year column first and previous year column as the second one. If this is a case, there needs an interchange of the columns. If suppose they are given in such a way, 31st March 21 as a first column and 31st March 22 as a second column, they need not do any interchange. Like how you have the question, you carry forward in the same manner, do the analysis for the absolute change and percentage change and get the values. Okay, so taking a call.
Yes, sir.
Okay, you have to take a call before you execute the problem. Whether is there a necessity to interchange the columns or there is no necessity to interchange the columns, that you will come to a conclusion only if you know the clarity on which is a current year and which is a previous year. And the question, okay, can be in any manner, but when you execute your problem, the order should be first column that is in the year. Okay, that is B column. Sorry, A column should be your previous year and B column should be the current year. So it should be in such a way. If these are things set up, then you can go ahead with the problem. No doubt about it. So with this, I'm stopping the session, and of course, I'll put the session also in the record mode. You can just go and watch it in the YouTube once I upload it off. Okay. So, any doubts so far in the concept? What is a financial statement is all about? What is a comparative statement? What are the statements that we are going to take it for the comparison? And what are the types of comparison that we have it? And how we did this comparative statement of a balance sheet of a particular company? And what is the current year, previous year? In all these concepts, if there is any doubt before we wind up, please do let me know. If there is no doubt, then please you kindly share this particular video with all your friends and classmates and also help them up and ask them to subscribe my channel and also put a thumbs up if they like it or thumbs down, okay, if they dislike it. Please ask them to give their feedback and comments in the comment section. Okay.
Okay, sir.
Thank you, Kana. Bye.
Thank you, sir.